Hi traders, and welcome to the fourth video of the Impact Strategy. Let's start by explaining that we have different kind of traders. We have scalpers, intraday traders, day traders, swing traders, position traders, and carry traders. Now these are summed up in chronological order from short to long term. Now this is not the time to go in depth in what they each are, but we want you to be aware that there are people trading on all time frames. It's a choice a trader has to make, and it will depend on a lot of things. Psychology, mindset, patience, available time, risk appetite, willingness to do fundamental research, screen time. All these things play a role in what kind of trader you are or will be. Don't be a scalper if you can only look at your charts once a day. Now, why is this important? To explain the maturity of the trend. How old is the trend and how much more potential does the trend has? It's definitely possible that you have a great buy setup on a small time frame, but in fact being at an extreme level on a higher time frame. Dangerous. Take a look at this example. A great sell setup for the day traders on the 1 hour time frame, but on the 4 hour time frame the swing traders were taking profit. Result, the 1 hour sell took a loss because they were not aware of what was happening on the bigger time frame. That's why we always need to check the higher time frame before making a trade. Now, our pivot indicator, which we will explain later, shows us where these profit-taking zones are. It's very unwise to enter in a profit-taking zone on a higher time frame, because the trend has matured too much. For example, entering for a buy in a swing trader's bullish profit-taking zone. Unless you have strong reasons to believe buyers, in this case, will keep driving price higher. Now, entering in that zone for a sell on the smaller time frame then again is possible to trade a reversal. But I won't recommend doing that if you're a beginner. It still carries a higher level of risk. Entering in a profit-taking area on the higher time frame can only be done if we see a smaller time frame break of structure, and if we get a perfect sell setup on that smaller time frame. Now, how far we can expect that sell to go is for our pivot video to explain. We would need to see price creating a pattern like this, where price is creating a double top, then breaking structure to the downside, and then coming back to create a lower high in our zone of interest. It would be exactly the same but upside down if we were in a downtrend and we wanted to buy in the bigger time frame profit-taking zone. Actually, what we're doing is waiting for the smaller time frame to show us the new direction of the trend, which then makes sense if it's happening in the bigger time frame reversal or take profit zone. But for starters, it's recommended to stay away from it. And just look how price acts until you got more experience. Sometimes you can learn more from watching than from entering. Because when your money's at risk, your mind tends to filter out the signs that the market is giving you that are against your position. So keep that in mind. A very important thing all traders should always keep in the back of their mind is this. Not only look for confirmations, but also look for signs that will prove your analysis wrong. If you can't find something that will prove you wrong, then you're probably right. This strategy was originally designed to be a swing and day trader strategy, which later in time was improved to use on other time frames as well. When we're day trading, we can trade the Asian fade, because we're always speaking about price and that we should enter at the correct level, but timing is also very important. Once we're explaining how to use pivot points, we will also talk about timing for other time frames, but for now we're talking about the 1 hour and the 30-minute time frame, a typical day trader's time frame. Oh, and another thing I want to add, the reversal patterns that we just saw are also applicable at the end of a retracement or at the end of the Asian fade. Now, what is the Asian fade? By now, we all know that the market moves in impulses and retracements. Right, so at the end of the New York session, the Asian session opens. That's nothing new. But the Asian session is a very important one for traders, especially for day traders. The Asian session, you ask yourself? But there's no volatility or volume in that session. Exactly. Most of the time, the Asian session has a contractionary type of price action, which comes right after a high volume and mostly impulsive looking New York session. The goal is to front run the London boys. Let me tell you a short story. Imagine this. There's a British banker in his fabulous British suit with his fabulous tie, walking into a skyscraper with his black tea or whatever they drink, and he sits down at his desk and turns on his computer to start his trading day. What are these traders looking to do for the first trade of the day? Think of the universal truth. I know it, you know it, I know you know it, and you know I know that you know it. Buy low and sell high. They want to sell as long as they believe on the bigger time frame there is a downtrend. Imagine this guy starting up his computer and think by himself, it's a downtrend, I sold yesterday. By the way, these guys are also trend traders. He's looking at his charts and sees, woohoo, Asia is up! So he's going to want to sell. That's why the Asian session is so important for day traders. It works the same way for an uptrend. We wait for Asia to create a retracement, a higher low, and enter for a buy around London Open. Of course, this depends on the pair that you're trading as well. USD CAD, for example, will most likely move during the New York session. Let's see how this looks on the charts. Let's explain the Asian fade in an uptrend first. Very important, make sure to be on the 1 hour time frame. 30-minute works as well. Now, take a look at this move. That's a nice impulsive move, right? When did this move actually take off? As you can see at the bottom of the screen, 3 p.m. For me, that's 1 hour into the New York session. The move continues up until the end of the session. Then it still goes up but a little choppy, and then around London Open it makes another push to the upside. Then it makes a retracement, and as you can see, the retracement goes into the Asian session, starts bottoming out by the end of the Asian session, and by the time the British banker opens his charts to start the London session, the higher low has been created and he can buy the next move up. And that's exactly what happened. The move again ends around the end of the New York session, and we see another retracement during the Asian session. Now don't expect it to be always picture perfect. Now and then the times will be a little different depending on what is driving the market at that moment. But it's the framework, the idea and psychology behind it that matters. Let me show you a sneak peek real fast of the pivot zones and you'll see the power of it. Buy the retracement in the green zone. That's all you need to do. Now what would be the next move you make? Buy around London Open in the buy zone. Might actually work. Okay, let's close the pivot indicator for now because I'm front running things. Now the price action that we like to see in these zones are something like this on a smaller time frame. A double bottom, a break of structure, and a higher low that we can buy. Let's see how this looks in a downtrending market. How do we read this chart? Price failed to create a higher high here, then a sharp push down happened when the London session opened, and then we got anything but a perfect Asian fade. The actual pullback happened much sooner in the New York session. After that pullback we did see some low volumes as we can expect in the Asian session, and when London opened its doors to the trading floor, sellers came in hard again. Which perfectly makes sense. Selling at the London Open is what made them a boatload of money yesterday. So of course that they are gonna do the same thing today. The move lasted until the end of the New York session. We had a nice Asian fade here, don't forget to look at the timing. And when the London session began, they did the same thing again. Then we saw another perfect Asian fade. Yes, it started a bit early at the end of the London session, but the pips were in the bag, right? 9 o'clock, London boys enter the trading floor, and guess what? They sell that bad boy and they do the same thing that they've been doing for the entire week all over again. The move ends around New York close and there's another perfect Asian fade. Getting ready for the London boys by the time they wake up. Now just because it's beautiful to see, let's plot our pivot points on there just for a sec and see how nice these red zones match. I love it. Okay, that was the Asian fade explained. We hope this video was helpful and would like to see you in the next video, where we will be explaining our tools and indicators. Bye!